What's going on, guys? Hamilton here with the Trading Initiative. Next 10 minutes, I want to go through a bunch of different positions that we have on the books right now, but I want to prove to you that we actually own them first and then hopefully deconstruct the trades. Most of these are up huge. Hopefully you can pull something away from it. First things first, you can see some big wins. I want to preface something before you see the bigger wins. We don't give a shit about anybody's opinion, respectfully. Even our own, inside of our community. We don't care about whether or not we like the company itself. Fundamentals don't mean shit to us. They are backwards looking. We are not interested in taking previous data and then trying to predict what's going to happen in the future. The only thing we care about inside of the Trading Initiative is price. What is price telling us right now? And as long as you have the general understanding that prices trend, which is a core tenet of technical analysis, hopefully you can catch the trend in the right direction and make a couple bucks. February 26th, you can see we had a bunch of big wins. App, Uber, Wells Fargo. These are not new trades. PanW is actually a newer trade. He bought this off of the pullback post-ER. Congratulations, Brian. IBIT, RIOT, Mara. Bigger trades. Hood up 371.8%. But what I want to focus on here is actually Dom's position listing because it's incredible. Dom has been with us for 3 years inside of the Traders Development Program. I'm going to go ahead and try to maximize this a little bit, but you can see App is up 325%, ARM's up 300%, Uber's up 235, Riot's up 231, Dell's up 125, Meta's up 109. All of these positions are completely risk-free right now. He has sold more than half of his position, and therefore there is no risk against account capital. At this point, he could let these things run until they hit their price targets or stop out, and he's not going to lose any cash from his account. We call this stress-free trading, and this is exactly what we strive for inside of the Trading Initiative. If you haven't noticed, we cater towards a different type of trader, guys and girls that are either have outside commitments. They either own their own company or they work full-time, so they can't obsess over intraday moves. They're not day trading. They're not scalping. We want time on our positions. The greatest edge for a swing trader is time. So what the hell is going on with swing traders selling their positions after 2 or 3 days of owning them? Hell no. We want to own these things for a long time. Rounding off its positions list, Cart, which is a relatively new ad, Hood, which is actually relatively new as well, GBTC shares, and CrowdStrike, which got hit with the PanW but is back up and filling the gap. This is a fantastic positions list. So you see the proof. You see that we're in these trades. We've been in these trades. A lot of these trades have been highlighted on this channel, but let's just quickly go through each one. And I mean it, quickly. Actually go through each here that Dom is in, and I will try to talk to you very quickly why we bought it. App, first things first, we liked this sideways consolidation underneath overhead supply at 75. This is the same sort of setup that we bought on Uber a while ago. We cut the chart in half. It's a recent IPO. We cut the chart in half. We said for whatever reason, when App is trading above $45, we probably want to be long. And if it's trading below $45, we probably want to be short. Well, in a bull market, we definitely don't want to short anything. So we're trying to get long App. We said 45 bucks makes the most sense. It definitely helps that we have a sideways consolidation range over the course of many months. If you're a technical trader, you understand that this is pent-up demand. This is accumulation. You can go ahead and justify it with that VRVP right there. And we said above 45 bucks, we want to own this. And we did. We bought it. We held through the pullback because it didn't stop us out. We got the big gap up on ER. And now we're halfway through the metered move that we're expecting up towards 67. But once again, we have a lot of time on this trade. It's already free. And they're straight calls. So theoretically, the infinite profitability scenario comes in. We have no idea how much these are going to be up, but this is a fantastic start. And once again, there's no way we can potentially lose on this because we've already taken half. Now, the biggest trade, I guess you could say, that we have in the group right now based off of just pure dollar amount is ARM. We started buying ARM back in November. We added in at the bottom of the range. We added again in here, and then we got the big gap up in ER. Now, what's important to understand about ARM is not necessarily that this is some incredible trade. It's the fact that we managed the trade intra-trade. Right? We rolled out contracts. We added more time to this trade because we realized it was a strong stock in a strong industry group, semiconductors, obviously. And this had the benefit of the doubt in this big blue sky type of scenario, meaning all-time high. There's no resistance that we have to worry about. There's no sellers at a certain price point that we have to worry about other than nice big round numbers, which we won't get into right now. But we caught the big gap up, which pushed our contracts up to, some of us, including myself, thousands of percent, right? 2,000+% right now. And it looks like ARM wants another all-time high shove. But ARM is a great example of adding into the trade at strategic spots throughout the uptrends. If you don't know what I'm talking about, I did an entire webinar on buying these things in stage 2 breakouts. ARM was the focus point. So once again, ARM, fantastic trade. There's no way we can lose on this thing. And I actually think that it's probably going to be the biggest trade potentially that we take this It absolutely has the opportunity dollar amount wise. Uber, another fantastic trade. And as I said with app, we just cut the chart in half. Now, we've been buying Uber since last year. You can see we cut the chart in half somewhere around 37.5-ish. We bought it originally. One thing that's distinctly different about Uber, which you will find across charts that we're actually trading right now, hint, hint, AMD, is we love when resistance gets broken to the upside and then a base gets built on top of it. We call it stacking. When a demand zone immediately starts to form on top of a previous supply zone, it's just a basic resistance turned supply flip, right? Or resistance turned support, flip. We like that about Uber. So we grabbed an Uber position, and this is our third trade in the last 12 months on Uber. All three have been wildly profitable, and we did buy the 64 area all-time high breakout. For those of you that struggle buying all-time high breakouts, if this isn't enough proof for you, please, all-time high breakouts are a fantastic spot to add exposure because you know where you're wrong. If you break back down below, all-time high, you could get out from a technical standpoint. This is a very easy trade. It was a layup of a trade, and we nailed it. Now, Uber gapped up. Because of the lift ER, it's building out somewhat of a bull pennant here. We do expect that if Uber breaks above $80, $81, this is going to be a rocket ship up towards 90 to 95, which is our overall price target. Most of us have straight calls, and above $80, we're back in the money. This is a completely free trade already, but we expect this to continue to be a big winner. As a matter of fact, we're looking at potentially adding in on that bull pennant breakout if it actually happens, but we are prepared to hold through a potential gap fill as well. It's the benefit of selling half at over 100% to turn these things completely risk-free. It's not clicking with you. Hopefully, you're understanding why we do it. RIOT, we've traded this so many goddamn times over the last 24 months. It's ridiculous. And not only RIOT, by the way, but Mara, Coin, CleanSpark, we had one guy trade. Hive, we have had a couple guys trade. All of these crypto miners, or at least crypto names that have direct correlations to the Bitcoin USD price chart, are fair game. We want to own these as long as BTC is going up. And so does it have to be harder than just buying previous supply zones or demand zones, No, we don't think it does. Every single time RIOT got back down towards $10, we bought some contracts, and every single time it bounces. It doesn't have to be any harder than that. We've done this particular thing 3 or 4 different times. We bought this, we bought this, we bought this, we bought this. Mara as well, by the way. Don't want to deviate too much from the actual positions list, but you can see the same type of price action in Mara. Every time we came down and tested a previous demand zone, we just bought it for the fucking bounce because I don't know if you've been paying attention, but Bitcoin is moving up and to the right over the last 18 months. There's no reason to expect this to stop regardless of what you think about Bitcoin, because remember, you're a technical trader, and technical traders go long when the primary trend is long. Makes total sense, right? So once again, the RIOT trade, and Dom bought I believe, near the $10 area, and obviously this is free as well. There's no risk against his account capital if this does pull back, and he is holding a June $20 call. So not only is he totally okay with this, but he's actually pretty close to in the money. Totally expect this thing to continue to break because Bitcoin's breaking out. DELL, did not actually expect him to be in this trade, but this is a fantastic trade. Now, he's been with us for over 3 years. He's actually the guy that added 127% to his account last year. And I'm telling you guys, inside of TTI, we don't trade with small accounts. So it's a decent amount of cash that he added to his overall account last year. And here he is, exemplifying a lot of the things that we like to teach in TTI. Don't be afraid to buy these all-time high breakouts. Don't be afraid to go out and really put yourself out there if you think that there's a trade to be made in the right industry group and sector. And he did. Instead of buying back here in June of 2023, which we tried to do actually, he went ahead and said, listen, if we're breaking out from this potential rounded top, he wants in on it. And so he did. He bought the first candlestick on the breakout, and you can see that that ended up being an awesome trade for him. Once again, it looks like it's going to be it is a market leader. I shouldn't say it like it is. It is a market leader within the industry group that it is. It does have ER. And I want to point something out. He's already up 125% in this trade with ER coming up, meaning that whether or not he wants to hold 3 ER is completely up to him. He definitely has the expiration to do so, but there's no risk against his account capital right now because he's already closed half of his trade. So if he does hold this and ER gaps this thing down huge and then all of a sudden the contract's worthless, hey, you got a freebie. It's basically like a lotto, right? And you don't have to pay for it anymore. You're already out, right? So you're playing with house money here. This is why we like to do this specifically before ER, because if ER kills the trade, we don't actually lose any money. And why would you not take that opportunity in a primary uptrend in a stock that is showing market leadership characteristics, right? Hope that makes sense to you. Now, Meta, he unfortunately was on the bad side of the Meta trade, and although he is up and over 100%, the Meta trade right now is from 109.5%. He did buy this way back in November or December. This is when we've traded Meta multiple times over the last 12 months. Again, you can see we actually did a webinar on this. We bought here, we bought the pullback here, and then we bought here. But he unfortunately bought call debit spreads. Now, I'm going to tell you something really quick, guys. If there's a scenario where you can buy straight calls or call debit spreads and you're going into an all-time high type of scenario, if IV is not crushing you, meaning if IVR is less than 50 and IV is less than 50, as long as the contracts are not a bajillion dollars, right? If you can swing them, you should be going for straight calls. Why? Because probability states that on any sort of breakout, IV is going to expand. And if you're in straight calls, the premium expands along with IV expansion. If you guys know anything about IV crush, if it's above 50 IVR or above 50 IV, maybe those call debit spreads were better. Now, in Dom's case, he bought the call debit spreads purely to de-risk his overall portfolio. He had a lot of exposure to the long side at that specific time. He didn't want to push a bunch of capital into the market because we just didn't know back in November/December if we were going to continue to roll into 2024 hot. Now we do. So he went and bought the call debit spreads to reduce his overall dollar amount in the market. And obviously we got the big gap up, and this is the $100,000 trade that you've seen us talk about. Shout out to Dustin, but also Dom, great trade, free trade. Now he's just waiting for this to expire worthless, or excuse me, not expire worthless, to expire so he can capitalize on full profitability because he's so far in the money here. There's no point in even closing it. Just let this thing run until June and collect the full premium. It's a call debit spread. So, talk CART really quick. Now, this is a relatively new, you can see that we've been talking about it extensively inside of TTI. This is a relatively new position that we opened up. It's not a very complicated position. If you know anything about stage 1, stage 2, stage 3, stage 4, all that stuff, we talk about it extensively on this channel. CART, nice stage 1 accumulation base. You can see here, and you can verify the accumulation by looking at your VRVP. It has that patented triangle-esque type of price action. We got the breakout. We're moving on up. First profit target here at 32.5. A couple guys were able to get out of this for free. I don't know if Dom was able to do that. On Friday, these were up and over 100% for some of the guys, depending on your entry. I actually never got the fill at 100%. I think the closest I got was like 90%. So Dom might have been able to actually close this. I haven't talked to him about it. He's in the $35 July 9th call, currently up 91%. We do think that within the next day or two, we're going to be able to get out of half of this. And once again, we have all that time. We have 5 months, 4 months, 5 months of expiration and a free trade in a recent IPO range breakout into all-time high scenario. Once again, who gives a shit about the company? It certainly looks like people want to own this post-ER. This looks like a fantastic trade. We just grabbed a position very early on in this potential stage 2 breakout, and we're able to turn it free with 4 to 5 months left of expiration. If it's not clicking yet, hopefully it is. Turn those motherfuckers free as soon as possible. His hood trade, now we're not up 100% on this. I think most of us, including myself, are up in the 80%-ish range, which is kind of a letdown because we expected this to be up and over 100% today with Mara, Riot, Coin, etc. And the big move we got today, 7.67%. But once again, this is a stage 2 breakout. Now we did whiff on this the first time. Full transparency, we lose a bunch of trades as well. It's not always winners. We hit around 45 to 50% win rate, but as you can tell, we're batting for big wins. We don't go for anything under 4-to-1 setup in returns. For options and for shares, it's 3-to-1 or better every single time. So we're allowed to lose a couple times. We did lose last time we traded hood. We did get the gap off of an EP. This is our COD setup. Right, so we got long hood above the 13.5 pivot once it built out a base, and obviously you can see where we're at right now, up about 80 to 90%. We're looking to turn these free over the next 2 to 3 days, and if we do, once again, we have plenty of time on the hood trade, August, $20 calls to let these things run completely risk-free to our account capital. That's the best fucking position you could be in, complete stress-free trade, guys. GBTC. He's in a bunch of shares here. Now, he does actually trade BTC USD as well. There's really nothing to talk about. If you're bullish Bitcoin, you're probably going to want to buy or have been buying GBTC. If you're an equities trader, fantastic. Looking like it wants to break out into a potential all-time high. So shout out, Dom. There's really nothing to talk about here. It's just if you're bullish Bitcoin's price action, you're probably bullish GBTC. And then the last one, CrowdStrike. Fantastic trade that I believe he did turn free prior to the gap down on PanW. Now, CrowdStrike did not get hit because of earnings itself. It got hit because of PanW. So we had the conversation inside of TTI. If you're already free, there's no reason to close this thing. Let it continue to run because it wasn't the company that made this thing fall. It was PanW. So let's just go ahead and let this thing go. But the hard conversation was for those of us that didn't have it free, what do we do? And we decided that if we were to close below the original risk off level, which I believe was around 280, we were going to close these things. We did hit below 280, but we did not close below it, and that is a fucking thing in TTI. We do not close early. We don't close intraday. We don't get scared. We close the position on the close, on the risk off, right? We do not try to front run anything. Long story short, front running is for fucking idiots, okay? You're not going to make a lot of money trying to front run everything. We're very systemized in terms of closing our positions at the correct stop levels. We're able to hold on to CrowdStrike. And obviously, I think his was free already. I'm not entirely sure, but it's right back up, right? Currently sitting at 5.1%. So guys, hopefully completely unedited, trying to get through as many positions as I can here. Hopefully this shines some light on how we're able to trade. Most of these trades have been open for multiple weeks or multiple months, right? If you're a swing trader and you're closing your trades early, you're doing yourself a disservice. Let those things run, especially if they're free. If you're able to close half at 100%, there's no account risk against you. Why would you not swing for the fences in a bull market, regardless of what the scary guys on all the social media platforms and all the TV and everything are screaming at you about a recession and everything? Hello, I don't know how much more fucking proof I need. Let them complain. They're fucking losers. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. And if you want more in-depth experience, there's a bunch of links in the bio. We can help you out 3 different ways. One of them is free. Sign up for the newsletter. You get a daily newsletter filled with scans, trade ideas, etc. If you want something a little bit better than that, links are below. You can check them out. I'll catch you in the next video.